Hi, Tony Sycamore here, Senior Market Analyst at IG in Australia. US equity markets finished last week on a high, driven by optimism for a 50 basis point interest rate cut at the upcoming FOMC meeting, alongside a rebound in the Michigan Consumer Sentiment Index to its highest level since May. This week began with reports of a second attempted assassination on Republican candidate Donald Trump, though financial and betting markets remain stable. The likelihood of a 50 basis point rate cut at this week's FOMC meeting has surged above 50%, supported by comments from former Fed President Dudley and economist Sam citing inflation control and a slowing in the labour market. Notably, this week's FOMC meeting falls exactly 17 years to the day after the Fed cut rates by 50 basis points back in 2007. Let's take a look at the charts of the S&P 500 and the NASDAQ to see where we are as we start the new week. Okay, we're starting with the NASDAQ daily chart, and what we can see here is the rally that really kicked off after this sell-off on Friday, the 6th of September, has taken the NASDAQ back towards this trendline resistance coming from the 20,690 high from around the 10th of July. This is a really important level, and what we need to be mindful of is we don't want to be sucked into false breaks before the FOMC meeting. So what I'm looking for is if the NASDAQ were to break above here and close above here post Thursday's FOMC meeting, there's a pretty good chance it can head up towards this 19,938 high and then kick on up towards the record highs coming in around 20,690. Should it break above there, then, well, 21,500 looks to be the next level. Now, conversely, should we see the NASDAQ reject this resistance level, then it would indicate that this correction is going to extend, possibly with another leg lower, down towards this 200-day moving average, currently coming in around 18,200, possibly a little bit deeper towards this uptrend support, which comes in around 17,800. So, in a nutshell, everything really depends on how the NASDAQ performs post the FOMC meeting on Thursday. Above, then, of course, it gives us the green light for further gains. If it rejects there, then we need to be mindful that it could be setting up for another leg lower into this support region here. For the S&P 500, well, it is now eyeing this horizontal resistance coming from the 56.69 high from mid-July, which picks up the 56.51 high from the end of August. So what we could be saying, or what we're saying here, is if we were to see the S&P 500 close above this 56.50 to 56.70 resistance area post Thursday's FOMC meeting, then it's the green light for the S&P to push on up towards 5,800. Now, if we were to see a false break higher and it closes back below there on Thursday, then we need to be mindful that this correction is likely to extend, and that could take the S&P initially back down towards this 5,400 level, which we saw just last week. It could also see a deeper decline down initially towards this 200-day moving average, which is coming in just a fraction below 5,200. So as things stand, it is an extremely important week. The price action post the FOMC meeting will be the most important for me. I don't want to get sucked into any noise ahead of that because really everything depends on that meeting on Thursday. If it is a 50 basis point cut, then probably we're going to see equity markets continue on higher. If it's only 25 basis points, then I think that's going to be met with market disappointment. Thank you for listening and have a good week ahead.